Hi Jamal, it's Oyen. So I got your email and I just thought we should just because I wasn't sure about your timings, I thought I'd make a video, send it to you, and then if you still wanted to catch up, because it was just the one question, wasn't it? So I imagine that this is pretty much the only thing that's sort of niggling you. Um, right, let's look at it. So what you have here is let's see, we'll get right. So we can just change that. It'll let me write on there. Let me do the photos. Alright, okay, there we are. 4 point. Let's just go for do that crazy. Right. Right, so what do we have here? We have an item part exchange for a newer model. Original 4,500 on the 11th of June 2004. So the probably one of the biggest key things to be very aware of is this point here about a full year depreciation is applied in the year of application and none in the year of disposal. So you buy this thing on the 11th of June 2004 and the year end is the 31st of July 2005 for the first year. So it means that you will get a full year depreciation in this year, in this time period, and then, 31st of March, that's the year end, 31st of March 2015. So 11th of June 2014 to the 31st of March 2015. That's 1 year. Then you have another year to the 31st of March 2016. So that's now 2 years of use. And then you sell it sometime in 2016, and it tells you we don't have any depreciation here because we're disposing of it. So you have 2 years out of 3 years of accumulated depreciation, and it tells you that it's a straight line method over 3 years. So the accumulated depreciation must be 3,000. Right, so what you really have is something that looks like this. Something that looks like this. You have cost, and you have accumulated depreciation, 3,000 here, 4,500. Right. Great. So it says you dispose of this thing or you part exchange it because you're going to buy another asset. But to part exchange something, you must dispose of the old. So we must create a disposal account. Right? And then to dispose of it, I need to, if you like, get it out of here. So it's no longer in our set of accounts. So credit cost 4,500, debit disposal 4,500, debit accumulated depreciation 3,000, credit disposal 3,000. So we can see that. Then it goes on to say that you part exchange it for 850, and then the rest is bought with cash. So we now have something that I guess you could do this, and we now have something. At least let's do the cash one first. 5180, and then I have bank 5180. But it says you also give this asset as well plus your cash. So plus your cash, you give this asset, and the person's willing to accept it because if you think about it, this car must have been worth something, and he says, give me this amount of money and I'll take your car as the balance. So if you're giving this amount of money and the car is worth this, it must be the difference between the two, and they tell you that it's 850. So it means that you have exchanged something that was worth 1,500, if you like, for 850. That's a value according to your depreciation, if that's fair. And you have exchanged it for 850. If you like, leaving you with a loss on sale or a loss on disposal of 650. I mean, that's my double entry. If you're creating a loss account, loss on sale, this is an expense. This is going to go to the income statement under your expenses. Remember, the disposal accounts always close out. We don't keep disposal accounts. They disappear. 4,500. So that's your disposal done. That's the cost of the new asset. And if you add these two together, you will get 0, 8 plus 5, 13, 0. You'll get 6,030, which is the cost of the new asset. That must have been the cost of the new asset. 5,180 is left the bank. And that's kind of how you arrive at your figures. Let me see. I think that's kind of the thrust of it. And if you like, of course, I haven't. Look at me, almost kind of missing out on something there. And it tells us that for the new set of assets that you have to depreciate those as well. And so, let's look at this. It tells you for all classes, depreciation is, where are we? So complete the task relating to the original equipment. Calculate the accumulated depreciation. So you're buying this new equipment, so we need to depreciate this new equipment in that year. So if you like, we now have, let's just come back here. So we have this new asset that we now have for 6030 that we're buying on the 31st of July X6, and to the 31st of March X7 we need to depreciate it. And I'm not sure what your depreciation charge is, unless I will assume that it is the same rate of 3 years as well. 6030 looks like a nice number, unless they're depreciating. So you will depreciate a full charge in that year. So you will have something that looks like this. You will have, if you like, your depreciation. You will have a depreciation charge of, because they should give you a depreciation policy. I haven't seen any. 6030. So divide that by 3 into 6. If you like, so you have 2010, and your accumulated depreciation is 2010, if you like. And so that's your kind of that's your double entry, isn't it? Depreciation expense and accumulated depreciation. Oops, sorry. Let's go again. And then this gets carried down, if you like, carried down 2010, bang bang, whatever, and then broke down 2010. I think you sent me the answers. Let me just have a look and see what they've done. So that's the equipment, the accumulated depreciation. Oops. Right, okay, sorry. The accumulated depreciation, right, is just for the equipment, the first set of equipment. So they're not even asking us to depreciate the new equipment. They just want you to depreciate the old equipment. And that was a 3,000 we calculated earlier. And just come over here. This over here. This 3,000 is all they want you to. This is what they're asking about here, right here. This 3,000. That's what they're asking about. What is this accumulated depreciation? And again, we did that because we worked out that you depreciate in the first and second year, and you don't depreciate in the third. So and that's it really. So I hope that's helpful. Send me a buzz when I send you this video and you watch it. Tell me if that helps, and if it doesn't, then we can talk again. But it'll be good to catch up before your exam. When is the exam? Okay. Anyway, we'll speak soon. Okay. Thank you. Oyen.